We're going to talk about some levels in Bitcoin, and it's just super interesting. I haven't made a video like this in ages, but I want to start making more videos like this. We're going to look at what's been going on over the past few weeks, been going on in the past few days, and what's been going on in the past 5 minutes. Why not? Let's look at every time frame. So let's just look at a few things that I'm looking at. Obviously, if we go down to the daily time frame, and I'm sitting here and I'm in the CME futures because futures are really great places to find gaps in the market, big fat gaps. I'll give you a couple of examples. You see this gap here, or this big gap here, right? So the market get taken up to this level at 14,000, and then there's a gap here and a gap here, and the market just gets sucked down to these levels, right? You see it just gets pulled back down to these levels, and then obviously bounces back up. In the bounce up, it leaves a gap here, and of course fills this gap here, gaps lower, and dumps down, filling in this gap even more, and there's a gap right here, right over here, that it filled in as well. So there's a few good ideas for gaps. You can see this left a gap here, which then got filled, which left a gap, which then got filled, and all we're doing is just filling in gaps. So where's gaps at the moment? As you can see, there's a gap right here at 11.5 to 11,900, and there's a gap down here. We've just gapped higher, down at 9.7, right? 9,007. So again, if you just follow the gaps, you've got some good trade locations already. Buying down at 9.7, selling up there, and if it breaks those lows, look at the next gap that it's going down to down here, or this gap down here, which it hasn't quite filled yet. On a wick, doesn't quite count being filled. But let's go to a different chart. Let's go to this MAD chart, okay? This is my weekly chart. So you can see I've got tons of levels on here. Let's stick it on the weekly so we can see the big picture of what's happening. Woo! What's going on over here? I am going to explain it. So these yellow lines are long-term weekly trend lines. They're confirmed trend lines. So you can see this trend line is from 2015, and it plays off of these lows. And the reason this is a valid trend line is because there's a W here. It's a big fat W. Let me draw this on the chart. If I just focus on this, you can see this W and breakout, right? So that means these levels, this trend line is validated on this breakout here. Boom. I hope I explained that well. Okay, let me just delete all of those pictures. So that's how I'm drawing weekly trend lines. We've also got a high to high trend line. We've got a low to low trend line, and we've got some another low to low trend line, and this is a high to low trend line as well. So those are cool too. And then we've got a couple of trend lines over here from the tops, and a couple of trend lines here from the tops, and then a couple of trend lines here from the bottom, and you can see where they converge, right? So these blue squares are where they converge. So let's look at an example of where trend lines converged before. This is a really powerful example. You can see this trend line drawn from this top to here. It wasn't ever a confirmed trend line, but it converged with this confirmed trend line over here from back in 2015. And look right there at the cross. At the cross, that's where we had that massive dump in 2019. Boom. And guess what? Down here, right by these trend line crossing again, we literally had it stop on a dime. Okay, so we've got these highs here, and I'll show you these purple lines. So I'm just showing you the bigger picture weekly sort of thing that I'm looking at, and how I found this bottom right here and how that level sort of happened. So as it went up in 2017, it had this massive hike up, right? And what markets generally do is they go up and then they test the breakout, okay? So you can see here, it goes up and it tests almost where it broke out, okay? So for example, let's just look at this market. So it goes up and then it comes down and it tests where it broke out. So it broke out of this high, and then it comes down to test the high. And then it breaks up out of this high, and then comes down to test this high. and then it breaks up out of this high, and then it comes down to test these levels, okay? So it's broken up out of this high and it's come down and it hasn't really tested any lower. So it's broken up out of this high now here in 2017. It came down, doink, and it tested this level right here and then flew away. So it's just about tested this level down at 2,900. It broke out of this level at 4,900 and then doink, came down and almost tested it. So I'd consider that untested, okay? Now, that was at 6,000. So that was at 4,900. So it didn't test this level. So as soon as I saw that, I drew that on in 2017. I was like, this level needs to be revisited. And anyway, the story was it went up and up and up and up and up and up. And then even when it came down to this level, 6,400, it only revisited these candle body lows, but it never tested this level. So I had a sneaky suspicion that it was going to revisit those levels. And throughout 2018, all these bearish spots drew out. As I said, came to this trend line, and then doink, it retested that level. And look at this, it came down and retested this previous level as well, right over here. And that level was the ultimate bottom. Look at that purple line. Literally doink right onto that level. Absolutely incredible bottom. So if you could see this playing out and you saw this W right here, then you know that this level is steady, it's got market structure, you're ready to go, and you had 1, 2, 3 weeks, 3 weeks here to get in long. That's a long time. So if I go down to the daily and I look at this time zone right here, let me just circle it so I can see where it is. Okay, so I can see that it's here. So let's have a look at the daily and let's see how many opportunities you had to get in. So not that much, but what you could see is it went up and it tested this level. So this is most likely a 38.2 level, and it went up and tested this level again. So right there, there's that W on, if you go down to the 4 hour, you will see the W, I'm sure of it. There we go. It's so easy to know that where your levels are when you know what you're looking for. So again, remember, we've already had the big weekly W. The most powerful thing you can have in a market is a weekly W, in my opinion. This big weekly W here that's confirmed. So you know you want to get in on the long side, right? So you're just looking for entries. So right here, I'm going to delete this circle. That was just so we could find it. But you can see very clearly that there is this. Where is that drawing tool? You can see that there's a very nice W here, right? And it breaks out. So now it breaks out. It's just working up the breakout level. And your trade location is, guess where? Is on the breakout, the W breakout level. So that would be your trade location, right? So the market works its way up. Everyone FOMO buys. They all get stopped out on this move. And your order is filled. You're ready to go. And if you did take that trade, then you are a very, very happy camper. Because look at where it took you. It took you all the way up here. And guess what? It took you right into Trendline Confluence again. And then doink, right down. And then it just played around these trend lines. Eventually, it put a W on the other side of this trend line right here, which came down all the way. We have to go back up to the daily to see how far back this trend line goes. But let's see where that was. That was right about here. So you can see this trend line came in, guess where? All the way from this M back in 2018. This massive M breakdown. M's are bearish, W's are bullish. So this massive M breakdown left a trend line. So we knew that it would come to revisit it, right? So what did it do? Went straight through the trend line. That's this trend line here. I'm going to put it in a little bit thicker for you because you know we love those thick trend lines. Style, border, thickness, brightness. No, I picked the wrong one. I picked the wrong one. Let me do it like this. And then I will make it a thicker line. Make it a thicker. Okay. So we dive through the trend line here, came below the trend line, went above the trend line. We're just fighting over the trend line, right? And finally, we put in a bottom on the trend line, and then that's technically a W. It then M'd out, but only to the bottom of this trend line, put in another W, and then off to the races. That went up to the 13,000 level. So what was special about that 13,000 level that made the market stop on a dime? Well, you all know how much I love Fibonacci retracements. I feel like Fibonacci is a law of the universe that we can't sort of get away from. It's an absolute, like, it's a guaranteed law of the universe. Like, everything is drawn in Fibonacci. If you just look up Fibonacci, I've definitely butchered that spelling. Fibonacci in nature. You can see that Fibonacci is in everything. It's in nature, it's in your fingerprint, it's in flowers, it's in the way a wave crashes, it's in the solar system. The Fibonacci spiral is everywhere. So I trust this as a universal law of nature. And guess what we have right here? Obviously, we have up here the shorting windows, because if the market retraces to this level, then you've got someone called Mountain Man sitting right over here with his order at 61.8 Fibonacci retracement. And look what the market did at that level, okay? It doinked right into that level and immediately reversed, okay? Immediately. It went down from 13,000 to 11,000, 2,000 dip in 2 days. So you would have had to have your orders to go short or to sell at the 61.8, which of course, if you would have drawn this Fibonacci retracement, you would have had orders all up in this level. And the market hasn't really done much since then. So now we're coming up to the sort of short-term time frame. So what's the market done since then? So let's look at what's been going on. Actually, let's stick it back to the daily, because now what we've got some really interesting lines. So we've got a Fibonacci retracement from up here to here. And right here is, oh, I already had that one drawn on. So right here is that 38.2 level, right? That's the Ray-Burchett first stop level. It's where the market sort of is going in a certain direction, but it decides, do I want to keep going in this direction or do I want to change? So that's why we don't know where we're going right now. Are we going to 16,000 or are we going back down to 4,000? And this is where the confusion is in the market. So the market doinks down to this level. Boom. You can see right there is the 38.2 and whoosh, immediately reverses. Okay, so that 38.2 level is really important. Then, guess what happens again? On this retracement here, we've got another red box that's drawn. Again, Fibonacci working his way. 61.8, 78.6, the line in the sand. So it doinks down to 38.2. We're unsure how that's going to resolve, but it V-bottoms and goes straight back into this Fibonacci retracement, which again is your next shorting window, because we've just gone short from up here. So you take profits at 38.2. Very smart to take profits, because that's when the market is deciding, because it doesn't know where it's going to go. It may go down, it may go up. So take profits. So you take profits at 38.2 from your short up here, and it goes straight back up, screaming up to this reload zone again, where you can go short again, and then doink right back down to this level. So why was this level important now? And all that was technically an ABCD retracement, okay? So this is a classic move in the market where you have a one move that sort of represents the next move. So A to B and C to D. It's a harmonic pattern, ABCD. So you can see the market started here, A, B, that's the retracement, B to C, that's the pullback to 61.8 that I was talking about, and to 78.6 in this case, and then C to D is the final leg, and you can see the market just stopped here, right at that level. So I'll remove that. So if you were tracking that, again, that could be your take profit objective from these shorts down here. You could also be taking them at 38.2 as well, and that's great. From here, there's a lot of confusion because it's up and down like crazy. It puts in this big W, and then it crashes again. And this is taking a long time, but all it's doing is it's doing these Fibonacci retracements again and again. So if you move this level down, what have you got? You've got another short reload zone here. So the market screams down, zooms back up here, comes back down again. So you're not underwater yet, but you're just keeping your position. And right here into this shorting window, that's where you can go short again and doink. And again, you're taking profits down here at the bottom end of the range. Now, if you're a range trader, then you are playing this range beautifully, okay? Let me just delete a few of these things. Now, a range trader, we're looking for the bottom end of the range. So let's look at this range right here. If we move this up, then you can see we've got the 61.8 retracement down here. On the bullish side, you can see I've already drawn that. So I've already drawn that here. That's this red green box. So I'm looking to go long in these green boxes. But because we're unsure, you want to make sure that there's sort of market structure, which there wasn't that well. And we had these ABCDs. Remember, ABCDs are very dangerous. So this move, clone, and take us down to here. So because of these projections down to 8,000, because from this higher time frame, sort of from the bottom to the top here, we're looking for a retracement down to these levels, 7,000, 6,000. It's dangerous. So going long over here is scary, and you only want to do it if you understand the range trades and you know that the bigger picture is short and you've got a great trade setup, you've got tight stops, you're willing to get out. So why was I going long down here? Okay, so there's a few reasons. We're down at the bottom end of this big range. There's this range from here to here, and we're right down at the bottom of this range. So I'm thinking down at the bottom of this range, are we gonna break the range, or are we gonna lose it? Okay, so we had this ABCD play out right here, where it went doink and then doink. Okay, so we got a reason here to go long. ABCD, this is a bullish ABCD. It obviously is going in a bearish direction, but this is a finishing pattern. So ABCD means that D is the end point of the harmonic, and that's where the market's going to move back. So right at this level, 9,500-ish, I'm thinking long anyway. Everyone's thinking dump because you've got these levels down here. Everyone's like, when are we going down to 8,000? But I'm thinking the market is going to mess with us a little bit more because we are down here at these levels. We've got this little W over here. Remember the power of W's. So this level right here, we've got a horizontal ray. That's the breakout level. So right down here at 9,700 is the breakout W level. You've also got W's in there. If you go all the way back, then you're starting to see some interesting stuff way back here. And the BFRN stands for big fat round number, which is 10,000, which acts as a magnet. And as you can see, there's a W off that level, W off that level, breaks through that level, and is being drawn back through that level. So I'm wondering here, should I go long, should I go short? And you just have to follow what the market says. And look what the market did. So first of all, I went short, or I went long on just a position which was based on the 78.6. I love the 78.6 level. And I don't need to draw that again because that's already there. So this 78.6 level right here, and I've drawn it twice. So this 78.6 level right here, just on the breakout of that W. So you've got two reasons now, and you're at the bottom of the range trade. You're in reload zones. You're in double reload zones. And now you've got this W to work with. So let's take this down to the hourly, where I started to get really, really interested in this trade. And like I said, I was already long from this 78.6 level. So I went long with a very short position, a very small position. You only do those sort of Jesse James setups, which is where I found this setup from Brian Beamish on The Rational Investor, where I took that trade And then all I do is I wait until the trade works out, or I get out below the bottom of the range. So the bottom of the range right here was 9,100. As you can see, we came down to 9,300. I took heat, but I didn't get out of the trade because it hadn't gone past that level. And then we put in a nice juicy W right over here. So what do we know about juicy W's? You get in on the breakout level. So here's that juicy W, and your entry is this breakout level. So let's see how many opportunities you had to go long here, right? Right here, it comes screaming back down to the bottom, so you can go long anywhere in here, and you're just taking heat, right? As long as you don't break this stop, you don't get out. Right over here, this low, and I would argue that the low is actually 9,100, where these trendline confluences are, bottom of range. That's where you really want to get out. But it never happened, right? It came screaming down and went straight back up. It put in another W where the level was right above it, okay? So when it came back down here, you had another opportunity to go long, okay? And then the market floundered around a little bit, and boom, you had another opportunity to get long. Now, if you're really thinking long position here, then you're starting to look at reload zones within reload zones. So little trades like this little window right here, you're starting to look for these tiny little reload zones within much bigger reload zones, okay? So you can see this candle right here, it came down to 9, the low was 9,539.58. If you look up here, this shows the low, and you can see that the low was 9,539.58, and right over here, the 61.8 is 9,539.83. So if you would have taken this position at 9,539.83, you would have got filled at 9,539.58 just on the bottom of that wick. That would have been your last opportunity to get long on this position before it really took off, and boom, you've just gone from 9,400 to 10,400, a rise in $2,000 in less than a couple of days. Absolute madness. And right now, what's happening? Okay, so now we've got to drill down to what's actually going on right now, and that will sort of sum up where and what I'm looking at. Remember, overall bigger picture is still quite bearish, I would say, sort of midterm bearish, simply because you've got those big M's working, right? We've come screaming down from this level up at 12,000 and revisiting these short zones, these sort of midterm short zones, these red boxes. If we draw more of these, then you'll see we're coming up to those windows again. So you don't want to be going long from up here. You want to be really careful. Look, from drawing from this zone right here, you can see we're already past a reload zone, right? So this is sort of really dangerous area for trading, where you don't want to be going long in red boxes. You want to be watching and waiting and seeing what happens. Remember, we're long from down here, these W's, right? So that was our trade. We're now taking profits on this trade and looking for short opportunities. Now, if you draw the reload zone up from the top here, you can see that the real short zone on this big range is right over here. That's the excellent short zone, so around 11,100 sort of thing. If you draw ABCDs from this bottom, then it may take you up to that reload zone. So what am I doing now? I'm getting out of my long positions, I'm looking for short positions, and I'm looking for a reload test. So remember that 38.2 that's so important. Remember that big fat round number of 10,000. Okay, look at the confluence of these levels. There's the 38.2 level from this range. There's the green boxes of the previous ranges. There's the big fat round number. So it wouldn't surprise me at all if we sort of came down to this position right here and consolidated. So either putting in an M or putting in a W. And that's the direction you want to take. If it's putting an M, you short it down to the bottom of the range, see what it does, take profits, let your position ride if it keeps going. If it's in a W, you go long here, and you ride it, taking profits here at the tops, and riding it so you can eventually go short and close your positions up here. So that's kind of what I'm thinking for the range. We're sort of in this range, and if it goes bottom, if it goes below, we're heading down. If it goes above, we're heading up, stopping around here, and going down. We could literally go down to 8,500, which is the next big support. We can make confluence at these weekly trend line levels, or we can come screaming all the way back down to these green boxes. So be very, very careful with going long here, because the long window is not that high. It's sort of, this is your risk, this is your window, right? So you're risking, you should only risk a little bit, but going short, you could potentially win a trade all the way back down to here. Now, any short position that you open, remember to be really, really careful, because short positions are inherently more dangerous. If the market decides to go bull and ride it up to 16,000 and break these highs and yada, 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 Bitcoin does what Bitcoin does sort of thing. If it happens to do that, you have to be willing to get out of your position, get out of your short position, and ride Bitcoin all the way up. So there's a few levels that I'm thinking of on Bitcoin at the moment. I hope this was helpful for you on a weekly time frame, a daily time frame. We looked at some hourly charts, we broke down some Fibonacci's, some gaps at the beginning there, some reload zones. We looked at Ray Bichette a lot. We looked at Fibonacci's. We looked at some ABCD patterns and how they form and how you look for W's at the end of ABC patterns. So I hope you learned a lot from this sort of quick lesson. And that's it for me. This is Josh Morris. Thank you so much for watching. So Bitcoin magic. Woo-hoo! And goodbye for now.